One of the biggest reasons investors panic is that the media loves to amplify the bad days, but rarely likes to talk about the slow and steady good days. This creates fear and stress, so let's break that cycle and focus on the bigger picture. The S&P 500 has seen multiple crashes over the last 20 years. The 2008 financial crisis, also known as the Great Recession, was triggered by the collapse of the housing market and excessive risk-taking by large financial institutions. Lehman Brothers, a 158-year-old investment bank, went bankrupt, causing a financial panic. The S&P 500 lost over 50% of its value from top to bottom in March of 2009. It was terrifying. But those who held on saw full recovery by 2013, and if you bought into the market decline, you recovered even faster. The bull market that followed lasted over a decade. COVID led to an economic shutdown. Again, pretty terrifying at the time. And in March 2020, the S&P 500 lost 34% in just 1 month, the fastest bear market decline in history. However, massive government stimulus helped fuel a record-breaking recovery. The market rebounded to new all-time highs within 5 months, proving that even in the face of global crisis, the long-term trend remained upward. During the 2022 bear market, inflation surged to 40-year highs, and the Federal Reserve aggressively raised interest rates to combat rising prices. The result, a 25% drop in the S&P 500, making it the worst year for stocks since 2008. But by late 2023, as inflation cooled and economic growth continued, the market staged another recovery. This brings us to today, where we are seeing a massive shock to the stock market, mainly due to tariffs. This story is yet to be written, so we will have to check in later to see the ending to this chapter. But if we look back on each of these market drops, there was one common factor. The headlines were screaming doom and gloom. But once the dust settled, the market just kept moving up, and nobody knew we had hit the bottom until we looked back. Going through these events is always stressful, but if you are patient and understand how resilient the US stock market is, it should give you more confidence. Most people lose money in the stock market not because they picked the wrong investments, but because they panic and sell at the worst possible time. Take March 2020, for example. If you sold your stocks after the crash, you locked in losses. But if you stayed in the game, you made back everything and more. Timing the market is nearly impossible. Even the pros on Wall Street can't do it consistently. And as Warren Buffett famously said, the stock market is designed to transfer money from the active to the patient. So instead of trying to predict short-term moves, focus on the long-term trend, which historically has been up. If you're enjoying this video, please take a second to subscribe to the channel. You know the saying, fix your roof when it's sunny out? Well, that applies to investing too, and it's a phrase I like to use a lot. When the market is booming, that's the time to prepare for the next downturn. That means building an emergency fund so you don't have to sell stocks when times get tough, rebalancing your portfolio to keep your allocation diversified, and taking the appropriate amount of risk based on your financial goals and time horizon. Don't wait for the next crisis to start making smart financial moves. If you listen to the headlines and react emotionally, you'll always be playing defense instead of taking control. Let's now look at a hypothetical example. If you had invested $100,000 in the S&P 500 20 years ago, it would be worth roughly $800,000 today. And that is despite all the crashes and corrections along the way. However, if you missed the 10 best days during those 20 years, then your return would be cut in half to $400,000. That's why staying invested is so powerful. If you miss any of those 10 days, your portfolio can get hammered over the long run. So when the market takes a dive, remember that this has happened before and is going to happen again. But in the long run, the US stock market is resilient and rewards patience. Remember, financial media makes money on sensational headlines, but real investing success comes from ignoring the noise and sticking to your plan. If you'd like to discuss your portfolio and retirement goals with us, visit our website at apsadvisor.com to schedule an appointment. Good luck out there, and I'll see you in the next video.